Obviously, Kathmandu, this is the downgrade that I guess some would say was coming not necessarily from Kathmandu, but certainly out of the space. Does it actually change your outlook on the stock to have Kathmandu come out and say they've had a tough June and they've downgraded their earnings guidance?
Brooke, it certainly has been very disappointing news today in our mind. During this volatile period of discretionary trading, we were expecting that Kathmandu was going to be one of the better performers, and in fact it was one of our key picks as a result of its vertically integrated business model, which we thought would be able to manage margins a little better. So it certainly has been very disappointing news out today, and we were expecting this volatile discretionary area, as we have seen a lot of these retailers coming through with downgrade. So it was more a period of adjustment, as I've flagged previously, and we do think that this will start to pick up again. But today they really have indicated that their sales are coming under pressure as a result of this warmer winter that they are experiencing over here in Australia and New Zealand, particularly over the last couple of weeks or so. And really this comes down to the fact that the company doesn't have a say over this, nor do we. So if we have a look at the underlying fundamentals of the company, they do in fact still look very strong, and despite this disappointing news, we do in fact like the positive outlook on the stock. We do think that Kathmandu has a very strong brand, and that vertically integrated business model that I mentioned before does enable greater control of market positioning and pricing. The business enhancement initiatives are underway in terms of its product mix aligning with a lot of its store locations. It also has that affluent target market and the ability to grow a very loyal customer base. And finally, we do think it is capable of taking market share without the need to excessively discount. So given all of these very positive underlying fundamentals, we do remain very positive despite this disappointing news today.
Now also, Leanne, you're looking at Sims Metals. This is one we mentioned in the headlines. This restructuring initiatives, what did you actually make of that news?
It has been fairly interesting. It's been disappointing, and the market's reacting negatively. The stock is down about 0.5%. They've today indicated that this restructuring initiative. We do know that the company at the moment is undertaking a strategic review of its operations in an attempt to revive its share price. We do know the shares have been significantly underperforming over the last 5 years or so. They are down about 60%, and over the last couple of years they really have been a very stagnant or flat performer. So really they do need to undertake this strategic review. Today they have identified some loss-making operations of their Sims Recycling Solutions, or SRS, businesses over in the UK and Canada. Really these businesses are unattractive going forward, so they will be disposing of them, and this is going to result in some restructuring costs of about $80 to $85 million. So I think as a result of some of this volatility, we are seeing that stock price trading lower. We do think there are a couple of key factors that will drive earnings recovery for Sims in the medium term. Firstly, some of those efficiency and improvement initiatives which are part of that strategic review, we do think do look positive, but we are still waiting to hear out further detail around this, which is expected to come through on around the 23rd of July. Secondly, we do need to start seeing a recovery in the US scrap generation, and of course that will come with a recovery over in the US, and that potentially will drive margins. We also need to start seeing a recovery in that metals recycling sector over in the US as well. So there are a couple of factors we need to focus on going forward, but I certainly think in the short term, until we receive further detail on that strategic review, we potentially still will see a bit of volatility in the stock.
Yeah, okay. And Leanne, for the rest of the market today, what have you noticed in terms of, I guess, what's weighing on this market overall?
It's a fairly disappointing day today, Brooke. We are seeing a lot of those sectors dragging lower, so that healthcare, information technology and the financial sector, as you mentioned previously. The consumer discretionary sector is also trading lower, but as we know, that is really being dragged lower by this earnings downgrade from Kathmandu. That material sector has been interesting. It was the best performer on our market yesterday after we saw that very strong data coming through from China. And of course we did see iron ore up about 1.4% overnight, and copper up about 1.1%. So we were expecting that material space to perform a little better. So that has been an underperformance, a bit of a surprise today, and a disappointment. So unfortunately our market is down around 0.4% and still seeing a very light